Hi, everyone. Thanks for tuning in. My name is Hamish. I'm the Executive Chair of Delorean Corporation. I thought that it might be useful. We're in the middle of a share purchase plan with current shareholders, and I thought it might be useful for shareholders and indeed other investors, very welcome to listen in, just to speak on a couple of the subset slides from the investor deck that was sent out with the share purchase plan. Just perhaps to put a bit of flavour around the information that's currently out there on the ASX. So this is, I guess, a subset of the shareholder update. I'll just step through these slides. So the usual disclaimer. Just shifting image of me. So the company is currently in the process of a share purchase plan. It follows a placement that was successfully made, $4.5 million, completed on the 4th of April, 2022. The placement was done at 17 cents per share, which is a discount of just shy of 19% to the VWAP for the previous 14 days. And we were trading about 21 cents prior to the placement occurring, and pretty consistently around that level before. And this placement was made to sophisticated institutional and professional investors. The purpose of the share purchase plan is to give existing shareholders who've supported us the opportunity to participate at the same terms as the placement. So $2 million target, just close to 12,000 shares at 17 cents per share, again at a 19%, 18.7% discount to the VWAP for the prior to the placement. 21 cents. The offer enables any existing shareholder at the 1st of April to take up to $30,000 worth of shares on the same terms. So we've currently got that on foot. Plan to close on the 22nd of April. We look forward. We've already tracking quite well to that, and we look forward to concluding that with you. In terms of the application of the funds, really we're looking at topping up existing cash reserves to take us forward, support the growth of the business that we've experienced since listing last year. So we're almost 12 months to the day on listing on the ASX. The company, as you'll see from the ensuing slides, has seen a fairly massive growth, and essentially the raise is to provide working capital to support performance bonds for our EPC contracts. It's to fund a large-scale generation certificate hedge contract that we've locked in, which has already got locked in future earnings, which makes good sense from an earnings perspective, delivering in 2024 and out. Some working capital to support the EPC projects themselves, including performance bonds, and some continued support for the bioenergy infrastructure project pipeline that we are in the process of delivering. And again, a little bit more on that later. You'll recall that Delorean Corporation's a vertically integrated renewable energy company specializing in bioenergy. We participate in the waste sector, the fast-growing waste sector, and the renewable energy marketplace. And we've got the capacity to deliver all the way from a project concept through to development approval, to FID, to engineering, construction, and operation, and through to energy retail. So what we're able to do is specialize in the entire chain from project development, infrastructure ownership, construction, and monetization, or extracting the greatest value out of the product, renewable energy, renewable heat, renewable gas that we're producing from our infrastructure and our bioenergy plants. Again, reminding investors, we are an Australian gentailer, or a generator and retailer in renewable energy. We're participating in this tsunami of organic waste that's flowing away from landfill and towards a sector that can process organics. The composting sector and ourselves really are the only recipients for this avalanche of waste that'll come through. It comes through already from the commercial industrial sector, but increasingly from the municipal sector for food organics and garden organics bins, which are designed to recycle and divert organics from landfill. On the other side, we're delivering green electricity, green heat, and increasingly green natural gas. And I guess the catalytic change that we've experienced in the last even 18 months is the story was all about green electricity and green heat, but hungry gas users in Australia and the pipeline operators need to decarbonise in order to meet their sustainability targets. They look at alternative options. Electrification is one, but if you're a business that can't electrify, you have to rely on gas, then your only options are really hydrogen, which in our view isn't economic now and maybe out of the money for some time, or green natural gas. And green natural gas is a product that we can deliver into the marketplace at a commensurate rate to fossil fuel gas, and in comparison to hydrogen at a significant discount, not just now, but probably for the foreseeable future. So we see a very large demand coming for green renewable gas. We're able to provide it alongside landfill operators and wastewater treatment plants, but that's pretty much all that's coming into the marketplace. And we feel that positions us really well in terms of the infrastructure that we're building and the offtake of green gas into the very near future. A snapshot again from the deck, but this is comparing the half-year results to December against half-year from the same period last year. We've experienced a 36% increase in revenue. Our earnings have been, underlying EBITDA has been a bit suppressed for a couple of reasons. The energy market in Western Australia has had a little bit of compression in terms of margin, and we have experienced some headwinds, as have all construction operations in Australia and New Zealand, around the construction of our EPC contracts, where the contracts were struck pre-COVID, and we've had to navigate our way through the COVID experience, access to site, the impacts on supply chain, and the impacts on the cost of materials internationally. As we move forward, the EPC contracts we got are post-COVID and reflect what the post-COVID world needs to be and are priced accordingly. And of course, we've gone from a $200 million project pipeline to a $500 million project pipeline when we take into account all of the weighted deals and opportunities that we've got as we flow into the next few years. A note on ESG, Delorean Corporation's not a company with an ESG agenda tacked on. At our epicenter, we are an ESG business, particularly around environment. So Sustainable Platform recently ranked us in the top 1% of companies for environmental and top 2% for sustainable technology. So we're really embracing this. We're aligning ourselves to the United Nations Sustainable Development Goals, particularly in the categories that you see here. And we're on the pathway to move towards alignment with the Task Force on Climate-Related Financial Disclosures, which we think is a good fit for us. And we're progressing our pathway towards that. Importantly, this slide and the next slide, just a couple of sort of, I guess, key pivotal components to the business. Investors might recall that late last year, we were awarded preferred tenderer status on Yarra Valley Water's second bioenergy plant. We've been progressing that actively, and we're in the very final stages of getting to contract signing on that. We expect to be able to make an announcement imminently. I can't preempt that, but at this stage, we're very confident that there'll be an announcement in the near future in relation to that. The exciting thing, I think, about the second Yarra Valley Water plant is it's a major water utility. It built the third commercial scale anaerobic digestion plant in Australia a few years ago, and we have now been selected it was a successful project, and they want to embark on a second project, and we've been selected as the preferred tenderer in that. So it's exciting, I think, not just for us, but it's a great sign of support for the embracing of anaerobic digestion as a bioenergy solution in Australia by a major water utility. Reiterating the relationship that we have with Brickworks, we've signed an MOU with Brickworks around the completion of feasibility studies for anaerobic digestion plants co-located with its brick manufacture infrastructure. It goes beyond just an MOU in that we have a master services agreement for the feasibility and development of the first two plants with Brickworks in New South Wales. And we'll be, the positive for us is that we are able to do the development work on a paid basis for Brickworks. We will have the first right for the construction contract for those projects once they get to FID, and we've got the first right for a 50-50 equity share in each of those underlying projects. So it's a very beneficial relationship for us and a fantastic opportunity for Brickworks to essentially decarbonise their operations. Again, Brickworks, a company that's done everything it can across its business successfully to decarbonise, but is constrained in what it can do without electrifying. Obviously, a gas operation can't move to electricity, and biomethane is the solution for Brickworks in this context. Shareholders may be familiar with this slide. It's the representation of the projects that we've got on foot, both historical projects already commissioned, projects under construction, the black ones, imminent projects that we're developing ourselves or in build for in the purple, and then the development pipeline in the blue and yellow as we roll forward. And I won't go through those projects in detail, but I think it provides good context here for where we're headed. This is our focus over the next 4 years. Essentially, the reason we listed is to move from being an EPC contractor and an energy retailer to adding on infrastructure ownership. So our whole program is to execute and deliver this pipeline of projects that we've already got underway, and be able to augment our existing revenues with free cash flows and annuity-based income streams that flow from those assets. So the whole idea is to build out our asset base and stabilise our earnings so that we get predictable year-on-year earnings and ultimately move to dividend infrastructure owning, dividend-paying renewable energy business. Of course, if we're going to roll that pipeline out, we're very aware of capital overhang in the marketplace, and critically, we've appointed planning partners who specialise in energy project finance to put together structured finance to support the first 200 million of deals, starting off with the first two projects, the VIC1 and the SA1 projects that you saw from the previous slide. To minimise capital overhang, our focus with this is to take on maximise third-party finance inside of the project SPVs, so that our contribution to these projects is minimised while we still retain a significant underlying ownership of each of these projects in the SPVs, and enjoy the benefit not just from building them and operating them, but taking the annuity-based income streams that flow from them. Again, very mindful of capital overhang and minimising the going to shareholders for capital for project finance. So to close, we're moving towards the end of H2 of this financial year. Our focus is on getting close on that structural finance, getting resolved to the moving into build for the Yarra Valley Water Project, and continue to grow the retail energy division. Again, I reflect that we're 12 months listed. We're a $40 million odd, depending on the day, market cap business, and we're really kicking with the big kids in Australia. So, the likes of Brickworks, the likes of Yarra Valley Water, the likes of AGIG, whom we have an MOU with around supplying gas and connecting gas into the national gas grid. Companies that are at large scale, multi-billion-dollar scale, in some cases, have done their due diligence on us and see us as a credible counterparty to work with, but also an emerging business to be able to solve their problems in their business. And we expect to be able to participate at that level on a continuing basis as time moves forward. So thanks very much for tuning in. We appreciate all shareholders' support, and we'd commend the share purchase plan to you. Encourage you to have a look at the documentation and make your own call on taking up your opportunity for up to $30,000 worth of stock in Delorean Corporation Limited. Thanks very much all.